Well, good morning, folks. Weekend box scores. Primary Waves edition is before us. Hey, it's Shooter. Hey, please review our disclosures at the end of this presentation. Now, let's jump right into this. Not a lot of names have changed. I'm still trying to stay in this tight box only because I think we're in this bearish risk-off environment here until this Israel war gets resolved. That's just my thought. So innovative industrial properties, we've going to put in a little bit of a higher low, around 67.53. So, continue to scale on any dips. There's still a possibility we come down and put in a 3. So drive 1, drive 2, drive 3, and then go. But looks constructive down here, that's for sure. Now, NTR, got sort of a nasty wick down last week on that candle. That was actually very disappointing. As long as our original primary wave holds up, and I can't actively get the accurate line, but I believe it's about 52, we should be good. However, even if that fails, this would, then we would get, I realize we have a confirmed low here. So this is drive 1. We do not have a drive 2 here. I would much rather have a drive 2, and then maybe we get a drive 3. So I don't think we get below $40 regardless on the downside. Let's just hope this holds. Usually with that kind of a euphoric pop to the downside, you get a bounce. However, we could be starting this cascade again too, and that's also concerning to the look. So just be cautious on position size with any additional market weakness there. Intel, we hooked our head below the breakout line. Now the count says we're going down to 31. So about $4 lower from here. I'm going to leave it up to you whether you trim and reload, possibly covered calls, sell 37, 39, 40 even to help insulate there just a little bit. But I do believe this is pretty solid with a floor. However, I'm going to add that semis are weak and a number of the charts look horrible, including Navitas. So I wouldn't be surprised if we do see some downside with the exception of the chip manufacturers that are our leaders like AMD, for example. All right, looking at Square, really just kind of brutal. I mean, I'm now getting a 1388. I'm going to suggest covering, not covered calls. I would take my hit and exit, and then plan on scaling back in because I'm not going to hold it for $25 to the downside. Count is really more, roughly. However, now the count says we're going to bounce first. However, this tells me it's not. This breakdown here tells me it's going to do this kind of thing. So I disagree with the count saying we're going to pop to 198. What it's basically doing is it's measuring an ABC. A, B, C, and it's using this entire leg to measure. So this has a big factor in saying, hey, we're going to bounce because of that. But if you look at the history of the tape, we've got this range between $140 and, that basically is a ledge. Once we get off that ledge, there's really not much to protect us here, and I want to make sure we're not in this. So, or you can hold and just buy some puts, and you should about break even, I would think, on the downside. But I would just sell. Me personally, I would sell my common shares and just buy puts. To be candid, but looks a little rough there. I wanted to bring that out this week. Now, Google really earnings just walloped us. Jeez. So looks like maybe 119. So that's our next entry long. And you could potentially sell some cash secured puts there. It should get back up to this 143 fairly quick. Then, that's a cycle wave 3. And we're going to break down right back down and back test the 8-day. So this is going to be real choppy in this range. Just keep that in mind. Now, we do break below the 50-day. Then we're looking at the 200-day, which really isn't that far down. Now, I've got trend support now since this first leg broke, because we did have a trend support line there. It broke, okay? Is right back down here around 103, 104, which makes it a little challenging because, honestly, with that look, we could keep bleeding. That's pretty aggressive down candle. I mean, pretty aggressive. And we did close at the bottom of the candle. So at that point, I'm always looking for one more candle similar in length to the first drawdown candle. That's just sort of my thought. So it's a hot mess right at the moment, but I still like Google. I mean, honestly, outside of cloud, the decreasing, future orders kind of thing, which I don't even think it's 20% of their book. So I probably should look, but I don't think everything else looks stellar, strong, good. So I don't know how long that's going to last. Maybe it's a, sell the news kind of event. And we'll go from there. But, at this point, that's just the hot mess we have. That's my thought. Okay. Oxy, we're still in this flat. Again, oil's not really cooperating, but, this again has become sort of a oil hedge for me, as far as my thought pattern. ultimately target one's around 73, then we get back test around 69. So maybe selling some 55 to 59 puts here would be a prudent move. We're about right where we are. And then let's take a look at Amazon. Now, these are our stocks that we either have covered calls on or sells in. Now we should get a continued move up to 131 on Amazon, and then we come back down to around the 200-day, and then we continue higher. So, I would take partials. I would use this as my entry. If you're selling the covered calls, I'd take the partials around 118. So you have plenty of time to the downside. Now we get back above the 50-day, we may need to change our mind. But you could also turn around and roll out, buy back some of your 141s, somewhere in this range, and then sell some 135 covered calls, or just buy some puts when we get back up to that 131.19. Now I'm going to try and do these labels. It takes me a little more time. I want to, what I'm trying to do is show the alternative of, hey, you can either buy puts or covered calls. This is the spot where we want to do it. So that's sort of what it's just it's like a flag. Hey, this is our next target. Hey, you can buy puts. Hey, you can sell covered calls, kind of thing. So that way it gives you a little bit of a heads up. Now looking at Apple, covered calls maybe around 182 is what we were sold. I'd buy them back around 163. And then, we're looking for a push to about 175. Now I'm going to say with, even though Apple is pretty solid here, this probably, that might be it. We might already be in. So we might want to buy back those covered calls here. And it's just, we got earnings this week, so maybe we get a drawdown Monday and Tuesday, and then we start running into earnings. So wherever that comes in, that's where I'd take it, and then wait to see what we do around that 175. Again, hey, the flag's up. Hey, this is our target. Buy some puts here or sell some covered calls, kind of thing. All right, Microsoft. Now, flat out buy back covered calls, or I would, right here, you got this little, it could continue lower, but right now the count's not seeing that. It's considering it to the upside. Some relative strength, even with that drawdown, did get beaten up towards the end of the week. RSI really is undecisive here. But that's just my thought on Microsoft. I think there's too much of a chance that it just grinds right back up. BRKB, I would buy back my covered calls around 328, which we're just about there. Target one is about 326. And then we should bounce back towards that 380. So, I'm seeing the potential with certain names for us to recover, but as long as the majority of the Magnificent Seven is weak, I don't think we're going to do that. So KKR, another player that sort of came right off, nasty candle. I'm always, when I see this, I always get concerned. A, B, C. I do not like this look here. So you've got the covered calls. If you have common shares, I probably would really at least be cautious on selling puts here, but the setup is there, the look is there, but I do not like this, what's happening here. I don't like that. So, but I'm suggesting that you buy back your covered calls around 52 and then head to the upside. But we may, basically you can draw, I don't have it on this chart. You can draw a trend support line from this low and this low and just roll it up and put an alert on that. And if that blows below there, all bets are off to the upside. I would be trimming my common positions, or, you could buy puts and just, hopefully you come out even with your percentage. You have to go probably about 10% of what your common share position was to do that kind of a thing. But it's a little more complex. I don't know that I necessarily want to push that too much. It's just a thought pattern. Because sometimes we get on the wrong side of it and we're like, we're down 30%. I don't really want to sell it. What can you do to try to recover if we have a confirmed downtrend? Once we break trend support, we have a confirmed downtrend, and then we potentially could be looking at this. And I really don't want to hold it through that. So I would take the hit and then maybe try and even recover a little bit buying some put. All right, so PLTR. Now we got earnings this week here. Count suggests we're going lower. Okay, so your sell trigger is this 1356 and target is 783. So, it's got some substantial downside. So I don't know that I would carry puts into earnings. I think I would wait for this breakdown because this is, it's faked me out a couple of times. We thought lower here and thought lower here and didn't get either one, excuse me. So that's sort of my thought. We did break below trend support, just poked our head below that. So, at this point, unless earnings are stellar, I think we head lower at this point, or at least keep this flat. So that's one reason I'm saying 1356 is sort of your line in the sand. Okay, shop covered calls. I would buy them back around 44. Then when we push up to our target 2 around 49, then that's time to buy puts. Now on SHOP, I did not say sell covered calls. These mid-size, mid caps, to me, have a lot of risk to the downside right now. And, we're just too many of our leaders are rolling over, and, we could actually see some round trips. And I didn't like that with SHOP. And part of it is because we have our confirmed low here, divergent low here, right? Another divergent low here. Right. And it looks to me like this might start to be a slow bleed once it comes down. So I would not be surprised if we at least test these lows, below 41. It could possibly go down. That is the reason I said, and if we have overall market weakness and we have, earnings gets a little rougher from where we are, SHOP would be one that I would be trimming my common positions up around the 8-day, and then wait and see where we land and try and rebuild the position down a little bit. That's just my concern there. Now, American Tower, we're below the breakdown, now back testing that. So this is a good spot to put a piece on if you're not short. But ultimately, once we get to that 166 off of this 143, because realize this is a good spot or this is a good spot to put on some puts to the downside. Well, that's what we have for this week, folks. Great trading. Until next time.